Now, the Reserve Bank of India's monetary policy meeting is going to conclude on Thursday. According to a poll that we conducted here on ET Now, 100% of the respondents believe that a pause in interest rate hikes is in store. 80% of them actually believe that the RBI is going to revise India's inflation target. It is important to remember, of course, that all these expectations are coming at a time when prices of food products are clearly on the rise. And we've discussed this even yesterday about food inflation and how the veg thali and the non-veg thali both are seeing a significant spike in the month of July. Let's bring in my colleague Ankur is here to walk us through the expectations. Ankur, tell us where we are pegging them this time, because more or less it seems like we are going to go ahead and see a pause, a continued pause on repo rates.
The best way to understand the expectation is by doing a poll and to ask the market participants what they are feeling, and hence we have done an ET Now poll on what are the expectations on repo rate hike this time, and 100% respondents has said that this is going to be a pause kind of a policy and there is no expectation on rate hike. The second question which we asked was on stance, which has been much debated, and we got a response on the stance as well, that withdrawal of accommodation may be retained by the MPC this time as well, despite the fact few of the MPC members has already questioned why RBI is keeping that stance. Apart from that, one more pertinent question is about when RBI is going to cut rates. Yes, cut rates. Now, this expectation was far wide if you talk about the last policy, but since we have done poll this time, we have got a response that Q1 of FY25 there is an expectation that RBI may start cutting rates. The other respondents said that by end of FY25 there is a chance that RBI may do so, and 20% responded that they can't comment on this matter. Apart from that, the last question which we asked to the respondents was regarding the projections of inflation. Will there be tinkering this time? And we have got response in favor that RBI is likely to revise inflation target this time. And as far as the broad expectations are concerned, we need to watch that whether or not there is going to be a hawkish stance by Reserve Bank of India, downside risk to CPI, since vegetable and cereal prices have spiked up, and after that, the expectation has come that Reserve Bank of India may tinker the CPI trend which has been given in the last policy. Apart from that, the GDP expectations is something which needs to be seen, whether or not there is a revision in GDP target. And lastly, there are always announcements outside the policy which includes CBDC, what is the status on digital rupee, and other policy announcements which needs to be watched out this time.
Ankur, thanks very much for walking us through the expectations, but let's decode what's happening right now. Of course, as far as this move to control food inflation is concerned, the Food Secretary of India, Sanjeev Chopra, has already announced today that the government is going to increase the supply of rice and wheat into the market, which means an additional 50 lakh tons of wheat and an additional 25 lakh tons of rice will be brought into the open market to bring down commodity prices. That's what we are picking up. Mayuresh Joshi is joining us, the head of equity at William O'Neill India, along with D K Joshi, the chief economist at CRISIL. First to you, Mr. Joshi, thanks for joining us both. But of course, Mr. Joshi, only yesterday I was speaking to your colleague at CRISIL about the rising costs of the Indian thali. How sticky do you think our food inflation is right now, and how much of that food inflation is going to weigh on the MPC's decision on interest rates this time, you think?
See, food inflation has two components. So one is vegetables, which are very volatile. And I think if rains remain okay, I think vegetable inflation is bound to come down in one or 2 months, particularly tomatoes or whatever you have. So there is some risk for onions, etc. But those events play out every year. I think the worry is on the part of cereals, which is rice, wheat, pulses, spices. I think these have been sticky. So from a central bank's perspective, a transitory hike in food inflation doesn't bother them. I think when the prices become sticky and the inflation becomes sticky then I think it becomes a concern, because then it starts spilling over to the other sectors and becomes generalized. So right now, I think it's too early to take that call whether this will be sticky or because monsoons haven't played out completely as yet. So I think food inflation is something that the central bank will be watching very closely because it has about 40% weight in overall inflation. As I said, vegetable not a worry. The cereals are a bigger worry at this juncture. I think if you look at the other part of consumer index, price index, the fuel inflation is quite low. I mean, it's coming down because the crude prices are this year right now are below what they were last year. So crude inflation is not a worry at this juncture. Then I think comes core. So core has two parts. One is services and other is goods. Now, the goods inflation in core has come down very sharply because input costs have come down very sharply. WPI is at -4% for the month of June, and it's likely to remain like that. So some of it is getting passed on to the end consumer. So the core WPI part has come down from 12% about a year ago to about 4.8% now. I think the services are a little sticky because I think the demand for services is very high. So this is the dynamics of inflation which is playing out right now. And the worry is the food. And within food, I think the cereals part.
This is going to be a continued concern, Mayuresh, while the RBI this time is largely expected to keep those key interest rates unchanged and sustain that kind of pause on repo rates. Market participants would be closely watching out for the central bank's commentary regardless. What exactly are the markets keen to hear, and what's the negative line that the markets may not perhaps take kindly to, Mayuresh?
Evening, Vikram, and evening, Mr. Joshi as well. Two aspects. One, as Mr. Joshi alluded to, I think the commentary related to how food inflation is expected to play out is going to be extremely critical from a governor's perspective. And what kind of tweaks does the RBI do in terms of its quarterly estimates as far as inflationary projections are concerned? With the inflation projections, also, I think what is the estimate for GDP for the current financial year? Does he maintain the same numbers that he did in the previous conference is going to be equally pertinent as well. So I think the next 2 months are equally going to be very, very important as far as the progress of monsoon goes. Because if there is a significant amount of shortage, obviously I think it will lay an impetus to food inflation going forward. And therefore, I think the RBI would like to watch what probably happens over the next couple of months. And statements around data points on how these entire aspects will get played out is something that the street will probably look at. The second aspect is obviously the downgrades that we've probably seen for the banking system as a whole, as far as the US markets are concerned. The kind of windfall tax that the Italian banks have the Italian regulator has probably imposed on Italian banks and the cascading effect thereof. Though our system is probably immune to what is probably happening to the West, largely as far as banking is concerned, any kind of spillover effects on the global credit system is something that the RBI governor might also touch point on at this juncture. And therefore, I think what the street might be looking out for is any hawkish statements in terms of data points. And if data points probably turn out to be worse, RBI probably expected to take any step where they've paused at this juncture, maybe take a step towards a hike if data points not favorable as far as inflationary conditions are concerned. I think those are the cues that the market will probably take.
There are global concerns. Even today, Mr. Joshi, we were talking about China and the kind of deflation that is getting reported out of there. There are concerns on their trade picture. There are concerns about their debt and whether or not there will be stimulus measures, whether there will be tax cuts. How is the government there going to possibly tackle this fall in demand, in domestic demand, which is causing these prices to decline? From the kind of research that you've done over at CRISIL, talking about the current state of food inflation in the country, tell us about inflation right now in India. What strikes out as different this time compared to the kind of inflation we are seeing elsewhere in the world? If you spot these nuances that the RBI would have to consider.
Well, I think in the western part of the world, the major problem is core inflation, which is when you take food and fuel out, what is left is called core. And core is a large part of the basket there. And I think that's the sticky part in Europe. That's the sticky part in US as well. So that is why I think even if Fed stops raising interest rates, they're not going to cut it down for quite some time. They will have to keep it higher for longer. And European Central Bank will continue with its rate increases because core inflation is a problem. I think comparatively, I think in India, because food has a very large part in the basket, so rising food inflation always becomes a concern for us. Core inflation is not that much of a concern at this juncture. It's only in services, some of the services. For goods, I think the input cost reduction is a good news for us, and I think the China slowdown also helps in keeping commodity prices lower. Globally, there is excess supply chain capacity right now. So I think the inputs for production, I think they're likely to remain soft, and that is a good news from an inflation perspective. I think, but food needs to be watched because it has 40% weight, and this is what differentiates us from rest of the western part of the world. Now, Asia, if you come closer home, Asia in general, the monetary policy is somewhat relieved because I think inflation pressures are not that high. And as I said, I think had it been core inflation, which would be pushing the inflation up in India, I think RBI would be more concerned, I think. But I think food, it's very volatile, is the most volatile component of our basket, and we need to watch how it plays out. And there have been instances in the past where rising food inflation, and when it sustains, I think it keeps the headline inflation above the target for quite some time. I think we haven't seen that happen decisively in the last 3-4 years, but I think it does. In the past, we've seen it play out that way. So now I think the last point that I would like to make is that I think we often talk of monsoons and food inflation. The last 4 years, we had overall normal monsoon. And in 3 of the last 4 years, food inflation was above 6%. So it's not just the monsoons. I think it's the global factors, many other things, pest attacks. So agriculture is a little complicated story. I think even a bit of excess rain can damage the crop. So I think it's got many idiosyncrasies, so to say.
Oh, yes, there are definitely a lot of idiosyncrasies, and there are a lot of moving pieces right now, Mayuresh. When you talk about the markets and the general sentiment, only yesterday we were talking about Moody's. Moody's has gone ahead and downgraded several banks, regional banks they may be, but after the kind of fall that we've seen in a couple of those banks, we have seen a move to kind of contain the kind of damage, but there could be more. At this point in time, how have you seen the interest rate sensitives move in our markets? How have they behaved through the ebb and flow of, yes, the RBI's policy decisions, but also these macro cues and these news flows that keep coming and attacking our kind of environment as well?
So in my opening remarks, I think with the kind of damage that we've probably seen in terms of downgrades for the regional banks in the US, I think our system is largely immune to a great deal. I think what the regulators have done over the last few years, both in terms of reporting standards, as well as the additional liquidity buffers that bankers have to keep with the central bank, I think those have proved to be a blessing in disguise even during the COVID times. Now, clearly, the asset quality stress is coming off. You've seen that in the majority of banks, private and public, provisioning has increased quite significantly. And with the kind of traction that we are probably expected to see over the next few quarters, both in terms of advances and deposit growth, the credit deposit ratio should be very, very robust for our banking system. So our banks, compared to the West, both in the US and the European zone, are way different, both in terms of risk parameters as well as growth standards as well. And therefore, we will stand out as far as the banking system is concerned, largely as far as the developments are happening out there. As far as the rate sensitives are concerned, I think the large expectation as we speak now is that the rate cycle is largely behind us. And therefore, I think what RBI has largely done till the last few months in terms of rate hikes is largely the end of the interest rate curve that we're probably seeing. Now, unless things worsen off structurally from here over the next few months, we might get a couple of rate hikes, but that is the worst case scenario that the market is probably penciling in. The base case scenario is that the worst is probably done. We might be one of the first economies in the next financial year, which might also initiate a rate cut cycle. And then in that can be a huge impetus for rate sensitives as well, because markets are forward-looking, Vikram, over the next 4 to 8 quarters. A lot of rate sensitives related to NBFCs, real estate ancillaries have probably reacted quite significantly. But as we move forward in the next few quarters and as we get closer to these data points, I think there will be a resetting for all these rate sensitives as well. So I think remain optimistic in terms of the banking system as a whole and rate sensitives in general, even if they consolidate over the next couple of quarters, should start doing well as FY24, FY25 numbers start unfolding.
Joshi, do you concur with that perspective that we could remain positive as far as the growth of the Indian economy is concerned, and we could be going in for a cut in interest rates and among the first economies to do so? Do you see that coming in the near term?
Well, the growth momentum is quite strong. I mean, if you just take the PMI, for instance, I think in the last 4 months, ending July, PMI for manufacturing is 58 and PMI for services is 62. So this is in a very strong expansion zone. So I think momentum does continue. Now, when the rate cut will happen, I think we are penciling in the first quarter of next year. And even if the Fed doesn't cut rate, I think that doesn't mean that India will not cut rate. I think there is synchronicity, but it's not a perfect correlation, so to say, because US has raised interest rates by 525 basis points. We have only raised by 250 basis points in this cycle. So I think from that angle, we may actually do it before the Fed does. I mean, that's the point I was trying to make. All depends on how inflation trajectory plays out, and food is extremely difficult to predict. Who would have imagined 2 months back that food inflation will bounce back like this? So I think there are most policies these days are data driven. I mean, it's very hard to see what happens over the next 6 to 8 months. I think as the information comes, the policy also reacts accordingly.
Yes, indeed it does. And we'll see how much data drives the RBI's next policy decision. The commentary is going to be very closely watched. Mayuresh and Mr. D K Joshi, thank you very much for joining us with your perspectives on this edition of India Tonight. Appreciate you joining us.